The transports are having a really rough time because commodities, specific oil, is really messing with the airlines.
He was able to hack into computer systems aboard airliners 20 times and managed to control one aircraft from his seat during a flight.
The transports in general have been pretty disappointing.
After soaring for the past 2 years, the airline stocks hit some turbulence when the price of oil finally bottomed, then started rebounding dramatically a couple months ago. Take American Airlines, AAL, which has been one of my favorites ever since its merger with U.S. Airways was announced back in February 2013. Remember, even before this industry was benefiting from the decline in oil prices, already had a huge tailwind thanks to the massive consolidation in the group that we talk about all the time. For decades, the airline stocks were simply too dangerous to own because there were so many players and competition ruinous. But the American-U.S. Airways deal was the last in a long line of mergers that rationalized the airline industry, made it so these companies could turn big profits. Then when you throw in last year's collapse in oil prices, a gigantic positive, given that jet fuel is a huge cost for these companies, you can understand how American Airlines was the best performing stock in the NASDAQ 100 last year, up 112%. But with oil rebounding lately, American's now down 15% from its recent highs. Even on a day like today, when the price of crude came down big time, stock couldn't rally. But at some point, these airline stocks are going to become too cheap to ignore again. Consider that American Airlines is trading just 5 times this year's earnings estimates, absurdly cheap given the synergies. So let's check in with Doug Parker, the chairman and CEO of American Airlines, hear more about how the company's doing and where it is headed. Mr. Parker, welcome back to Mad Money.
Thanks, Joe.
Thank you, Doug.
Great to be here.
Well, Doug, obviously you think that the stock's absurdly cheap because I understand that you decided to take your pay in American stock.
I did. Well, look, one, as a CEO, I think I should be compensated in the same currency that you're compensated in, which is our stock.
Okay.
Second thing is, look, the industry has changed. I think it's a great indication of how the industry has changed. The fact that an executive is willing to accept airline stock as a currency to be paid.
I know, that would be inconceivable.
Yeah, no kidding. Even I would have done it 5 years ago. But the reality is now we have an industry that's a real business. And, I don't think there's any chance that the stock is going to be nearly as volatile as it's been in the past. I think it's a real currency, and I'm happy to be paid in that.
Now, one of the things that's happened in the last few months is that there are people who are talking about how competition's come back. We had Spirit Airlines. Some of their routes have had competition. You know the reason I've been behind the group is that the competition seemed to have died down. Is it coming back?
Well, competition's good, and we're happy to compete.
Well, from the stock point of view, we don't like competition, but I understand.
We're in a competitive business, and it's a very and we're good at it. So we'll keep competing. I think a lot of what you're seeing and what's happening is as fuel prices have fallen, more capacity has been added, and capacity that's in excess of the growth in demand. So you're seeing unit revenues falling at a time that I think somewhat in a catch-up for what's happened. Our largest cost has fallen some 30, 40%. It's not an insignificant change in the economics of the business. So some capacity is being added, not by us, by some of our competitors, and we will obviously respond to that. But we're not going to be the ones that are.
But how do we know it's not going to be the old days, Doug?
I'm sorry?
It's not going to be the old days where guys are slashing fares trying to get me in the seat.
Yeah, and it's not the old days. This is nothing like the past when all of a sudden the industry would get a whiff of profitability and airlines would say, look, I made this much with 100 airplanes. I can make 50% more if I had 50% more airplanes.
There aren't that many. According to Jim McNerney, there aren't that many planes out there that anyone could go ramp up.
Yeah, but it doesn't take much. Look. Demand's going to grow 2-3%, right? As much like the economy does. You can clearly add more capacity than 2-3%, and our competitors are doing that. I think next year you're going to see growth of something, 5-6% in the domestic. That's going to have a negative impact on revenue per ASM. Yes, there's no doubt about that. But look, it's much better than it's ever been. It's nothing like we've seen in the past when. Again, when you'd see all airlines fighting for share, these are individual airlines making individual decisions. They're going to need to figure out how to compete with that growth, but American's going to compete with them.
Okay, now let's talk about a specific problem that American faces that you brought up. Frankly, I'm not bringing it up, which is this tremendous reservation system consolidation that's ahead. What does it mean?
Well, it's a big deal. It's the last big piece for our customers.
But it's huge, right?
Oh, yeah.
And these have derailed mergers in the past.
Well, they've certainly slowed them down, or created bumps in the road at a minimum. Putting together 2 reservation systems is a big deal, but it's the last big requirement to become one airline. It's what gets us all the synergies we need today. While we're American and U.S. Airways, and we can sell you a ticket on the 2 airlines. once we get this done, we're all American, and it's just going to be American Airlines. It's going to be one product, and it's going to allow us to get the synergies we need. But we have to combine these reservation systems. We're ready for it, and we've learned from what we've seen in the past. We've done a lot of things to mitigate it. We believe we're very well positioned. Our confidence is buoyed by the success we've had thus far. The team has done a phenomenal job.
But at the same time, you said earlier this week that you felt that the mentality of the people at American have to start being more like the people at U.S. air operations, or else you'll lose passengers.
Well, what I said was that the American Airlines product, as great as it was, had lost some of the focus on operational reliability.
Okay.
And the U.S. Airways and U.S. Airways, we had that focus. Yes. So I think it's a great, taking the American brand and cachet, and now adding to it the U.S. Airways operational reliability focus. We're going to do great things.
How about strong dollar versus weak dollar for you?
Well, it obviously hurts us in terms of our revenues collected in where we fly internationally, but it brings down oil prices, which is the net effect of that's positive to us. Stronger dollar means lower oil prices. It certainly means lower foreign-denominated receipts, of course, but net, we're better off with a stronger dollar.
Okay, how about some of the reliability measures? They're all going the right way now, aren't they, for you guys?
Yeah, we're getting there. Look, it's hard to bring two airlines together and still produce a reliable product, because those things run counter to each other sometimes. But our team's doing a great job, and then really, once we get through this reservation system, where we don't have people struggling with two different systems, I think you'll really see us pick up the operational reliability as well.
We had a little clip about hacking. Guys trying to get into your entertainment system, one-off, or not something I should worry about?
Look, we worry about all these things, but that's not an issue. No, that particular issue is not a safety issue. The in-flight entertainment system is not at all connected to the controls of the aircraft.
Oh, okay.
So there was no issue there whatsoever. But we worry about them all, and we look at it all the time.
All right, let's go back to what you said at the beginning, which is that this competition could come back. What makes you feel the economy being better, the fact that that people are traveling more, that it won't be ruinous? I know you said things are going to be better in the past, but when I hear that, I'm still thinking, well, geez, a year ago I didn't see a lot of competition. How do I know that 5 times earnings doesn't go to 4 times earnings? Because the earnings are actually coming down, and the stock's more expensive than we think.
Well, again, I believe what you're seeing is a decision on the part of some airlines to grow in excess of demand. I mean, none of them can possibly believe that demand. I mean, some airlines are talking about 8-10% growth rates. They can't believe they have that kind of demand growth. So what they must believe is that at these economics, they can fly more than they used to fly. Right. Look, I don't think that's right. But again, that's a lot different than the past, where we all took the good times to try and kill each other.
And that's why I want to know. I mean, you have your allocation of capital. I mean, you can just stand there and buy back stock. That's what you've been doing.
Yes.
At 5 times earnings, it's a good bet for the company.
We think it's the best use of our excess cash. It's your money. We should return it to you.
Well, there we go. That's why I like the stock. Okay, that's Doug Parker, Chairman and CEO of American Airlines. Always more candid than pretty much every other CEO, which is why we love him around here. Mad Money's back after the break. Thank you. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.